Righty guys, welcome to a new video. My name is Ruben. If you're new here, I primarily trade ICT and ICT macros, but I thought this week I'd get into a weekly review. These are some of the calls and the trades that I mentioned for the premium Discord community. And overall, not a bad week, pretty decent week. Here's what the stats look like. Let's get straight into it. So Monday, there was no trades. Didn't really like the volume. And what I really noticed the last couple of weeks is that the market's been very erratic. It's been very choppy, very erratic. A lot of people have, come to me and said, Ruben, like I'm really struggling, and I can appreciate that because the conditions have been interesting. Tuesday, two winning ideas. Wednesday, one loser, one winner. Thursday, one losing idea on call, and then Friday was called after during the live analysis section. So overall, a nice green week. But I wanted to actually discuss all the trades that were mentioned, both on Zoom calls that I host, live market reading, but also outside where I post live analysis in the chat section. Let's get into it. Alrighty, so here is Monday the 9th. And on the screen here, on the left-hand side of the screen, that is the 15-minute chart. Now, typically what I like to do is I like to look for 15-minute FVGs or fair value gaps to act as support or resistance. But I've been very cautious. I've been very cautious lately. And you can see on the right-hand side of the screen, this is now the 1-minute chart. Yes, we did use it as support. And yes, we did push higher. But I just didn't really like the conditions. So there was no call this day, no Zoom call. And there's been a lot of these the last couple of weeks because the market has been having these erratic movements, up, down, and then in between we're getting, all this chop, all these wicks. And it's been very tricky to trade. So I've been quite selective as to when I'm personally trading, but also when I'm hopping on our Zoom calls. So Monday, again, didn't like the lack of volume, decided to sit out. And yes, setups did present later. If you have a look on the right-hand side where I've drawn that red circle, you can see how price pivots during that macro. I think it's the 350 to 410. For me personally, happy to sit out and on to the next day. So that was Monday, no trading, no wins, no losses, completely fine. We move on. Tuesday the 10th was quite good. So Tuesday the 10th was a situation where there may have been a negative risk reward call out. Now, the thing is, typically I'll go for a one-to-one. Typically I go for a one-to-one and a hold a runner if I think it's going to run. In these conditions lately, guys, because of how we've been acting and the movement, I am sometimes okay taking a negative risk reward. I'm okay taking, less than a one-to-one as a partial, as a profit, because I'm trying to, squeeze as much as I can outside of the market or from the market. And then if more is offered, more is offered. So on Tuesday, there was large volume. So we caught a scalp. I caught a scalp for 10 and 20 handles at the start of that call. So this is a scalp long after S&T formed. And again, it's a rare case of negative risk to reward. But we'll talk about it, right? So here's the trade. So if you have a look at the bottom here, this is the 1-minute chart. And usually, with the Discord, we hop on roughly at about 1:30, 1:40 a.m. New York time. That's roughly when we hop on. So 1:30, 1:40 New York time. So what I saw here down the bottom, if you have a look, and I'll circle this on the screen, we had a change in the state of delivery. And then in orange there, you've got that inverse fair value gap. So that was a spot I called the long. And then obviously, taking 10, 20 handles here, reach about 18.75 handles. That there, in my opinion, is a valid scalp, either to take a profit or to take a partial. So in that case, it was a really, quick scalp. And then obviously price just mucked around for a long time. That was the first one. The rest of the call, nothing presented, ended up popping off. But later on, I called this trade. Now, I want to point this out. So if you're still here, please take notes. Have a look at the screen. Have a look at these two red lines that are marked. Right, this is then after our call live analysis framework. Now, notice on the screen, I've marked out a range, right? I've marked out this range, and you can see those two blue lines across. That is optimal trade entry. On the right-hand side of the screen, you can see how that trade would have played out. But I want to point out the fact that I don't know exactly where the market's going to go. And a lot of people want to seem like they know and they can predict. Of course, it looks like I've predicted the market here. It looks like I've anticipated that correctly. But notice how there's two drawings. That left-hand side image, there is two drawings. There are two drawings. One reacts from OTE. The second comes lower and actually sweeps sell-side liquidity. Now, here's the catch. You don't need to know which one's going to happen. Often for me, on any given session, any given day, there are more than one points or points where the market can react from. So in this case, if the market shows strength from that first point, it's a valid trade. If it doesn't, you don't take the trade, you wait for the next opportunity. The way I like to see the market, guys, it can react from points, from highs and lows, from fair value gaps during macros after sweeping liquidity, optimal trade entry, premium discount. And if I get a reaction around a key time frame, then I'm happy to take a trade. Does that make sense? Or I'm happy to call out a trade. So this day was pretty good. Again, small scalp here, but if not, there was a nice trade taken here. I think it was about 10, 15 handles, but it ran, right? It ran. And this is one of those situations where in this video, I'm illustrating the bare minimum. I'm not overextending, I'm illustrating the bare minimum. Some people just take the one-to-one. I know other people take a one-to-one and they're holding, right? So this trade, again, would have gone way more than a one-to-one. This one obviously would have gone a one-to-one and then stopped back at break even pretty quickly. So Tuesday, pretty good day. Let's move now on to Wednesday. Righty, so Wednesday there was one loser and one winning idea. Both were long ideas. Both were the same, the same framework. It's just that we got caught out on one. It's as simple as that. One was using a wick as a fair value gap, and the other was using just a typical inverse fair value gap. So this here is the 15-minute chart, and I want you to look what I've marked out here: swing low, swing high, and I've marked out between those two blue lines that there is optimal trade entry. We're also sitting inside of a 15-minute fair value gap. And again, the market can bounce from these points. So I'm looking for longs. Ultimately, because of this framework on the 15-minute chart, I'm looking for longs. Here's the first trade. Now, in hindsight, could have probably, waited a little bit longer and been a little bit more patient, and these things will happen. But you see that really long wick, the really long wick, and I'll put a circle around it here in the video, but the really long wick about 20 minutes before that entry, I was treating that like an FVG. So because of my long narrative, because of what I wanted to see, I wanted to see price push higher. And because we closed above the halfway point of that wick, I was looking for price to just spool straight up. Did it happen? No, right? So this was about an 8-handle loss here that I called on the live Zoom call. However, we waited, we were patient, we had the same narrative, and we waited for this setup. Beautiful, perfect, and delivered at least 20 handles. Now, in this situation, what did I like? We actually came down, we swept that sell side liquidity. You can see that in red. We're delivering from OTE, which is great. We start to work our way up, work our way up, work our way up. We come down, sweep the sell side, immediately come back up and create that inverse. That becomes the entry, stop below the bodies of the candles, either targeting a one-to-one for a partial or all off at one-to-one, and then holding runners to this high, which was 20 handles. And I know some people held a little bit longer, that's fine, but this is a really good trade. And this illustrates the fact that, look, I don't get it always right. I don't always, have 100% in terms of win rate or structure or statistics. It's not going to happen. But at the end of the day, what you're looking for is consistency, a consistent framework. And you're going to take losses, but keep the losses small. When you have winners, try to let them run, right? Try to let them run. Try to let them run when you're anticipating these things to happen. So again, pretty good week. Thursday was the only, true losing day here. It was one idea, one losing idea. And again, trying to navigate the choppy conditions, sticking to frameworks. I like the trade. You might not, but I like it. And we'll talk about it now. So here we go. Here is a trade. This was the 150 to 210 macro. You can see between those two blue lines, I've marked out optimal trade entry. Cool. We come into OTE. We have SMT at the highs, a nice rejection candle with a wick. And then we're using that down close candle to enter off, which is almost like a change in the state of delivery. Stop originally is either above the wick or above the halfway point of the wick. However, based on what price was doing, we decided to drop it down. So this would have been a stop out, I believe, for about 8 or 12 handles, somewhere around there. Nothing too crazy. And then I left it at that. Because again, there are points in the market, and this is a really crucial element to keep in mind. There are points in the market, there are times in the market where I'll just know that I'm offside, or I'll just know that the conditions don't look good. It's chopping around, it's very slow. These are things that I don't want to trade, and taking a loss is normal, but when you take a loss and the market starts, randomly going up, down, up, down, up, down, and just chopping around, the best thing you can do, in my opinion, is just to sit out of the market and wait for another day, or wait till later on, right? But on this day, that was it, right? So one losing trade. And Friday was quite nice. There was no call. However, I called a winning idea afterwards, and this was a typical trend continuation framework. Classic example. For me, it was a one-to-one risk-reward scalp. For others, they could have done this. I know some people held a little bit longer. That's fine. But here was the framework, right? So this is 420. So this is 420, my time, Australian time here. which is just after, I think that's about 2:20 New York time. So I'm talking to the Discord, outlining the framework here. Could look for something like this, and there was SMT at the lows, which I liked. So I wanted to see a pullback into OT and then price move higher. We're almost at OT. I mentioned that, OT will be the first reactionary point. Again, I don't know that price is going to react from there. I've just seen it happen time and time again. So I'm looking for price to come into OT and then our typical entry model being the inverse. And then here's that trade. So quite a few people took this. For me, it was just a one-to-one. I know some people held runners to the high. Plenty and plenty of opportunity. So overall, pretty good week, right? You're going to have losses, you're going to have wins, but overall, this is what it looked like. And this is the bare minimum. I'm not saying everyone, took just 1-to-1 and 1-to-1.2. Some people may have made more, some people may have made less. This is probably an average over the community. Monday for me, no trades. Tuesday, 2 winners, plus 25 handles. Wednesday was a positive day overall. The loser was smaller than the winner. Thursday, negative 13. Friday, plus 20. Give or take, it was roughly plus 39 to 40 handles, which is not bad, right? Which is not bad. Now, if you're using one mini contract for these trades, right, or two contracts, whatever it is, micros, minis, that is around $800, 40 handles, which is not a bad week, especially if you've got multiple accounts, if you're copy trading or you're trading on separate accounts. That's not a bad week. And this just shows that you don't have to win every day. You can take losing trades. You can still end up green. You can have losing days. You can have days where you do not trade. That is completely normal. But I thought I'd come in here and make a short and a quick video just to illustrate some of the ideas that I take myself, some of the trades that I mentioned to the Discord, the winners, the losers, the mistakes I make, the risk I take, and the mistakes that come from that. But it's all a learning experience. And I know a lot of people have found the last couple of weeks tricky. I have too, guys. It's not just you. It's about surviving these conditions. And again, keeping the risk tight. If you think it can run, hold runners. And again, following your system. Follow your system, follow the process, and you will see success. So if you like this video, guys, let me know below. Again, I appreciate all the support. And until next time, guys, let's get ready for a new week in the markets. Peace out. Hope you've enjoyed your weekend. Let's go.